Hey guys, what's going on? My name is James Mason. In this video, I'm going to talk about planning your trade and risk management. So, before you make any trade, period, you need to have a strategy for your entry point and your exit point. And not only that, after you determine your entry point, you need to have an idea where you want to set your stop loss, and that's risk management. So the common ratio for a lot of people in risk management is a 2-to-1 ratio, meaning, we'll just simplify it, meaning for every $1 that you want to risk for a loss, you want to make $2 in profit. So, obviously if we're talking about way lower cap stocks in the penny range, if you're willing to risk 5 cents per share on that trade, then you need to basically double that and have a goal of making 10 cents profit per trade. Not per trade, per share. So that's pretty much the standard ratio on it. Now things kind of change when you are actually trading larger cap stocks, in the couple $100 range, because they move within dollars. So that's a completely different strategy, and that's something that takes time to watch the price action on that to understand how those work. So again, before you make any trade, have a plan. What are you going to get into the stock at? Like, what price? Why are you buying in at that price? What potential does this stock show for it to uptrend? And that's a huge key, because really, unless if you are an investor, you should only be buying stocks to trade if they are uptrending, for a long position, or if you're shorting for a downward position. So, why do you see it uptrending? And it has to be, something valid. It can't just be, well, I just feel like it's going to uptrend. That's not valid, because the stocks and charts don't trade off of your feelings. And you need to have your exit point, because if you are thinking, okay, well, this is going good, it's hit my my point where I'm happy, but I want to ride it all the way up to the top. The thing is, it's best not to try to hit home runs, because a lot of times you can try to hit a home run and you will pass up profit and end up taking a loss. You got to think of it, trading is like baseball. You can have somebody that comes out in the game and they get lucky the first inning and they hit a grand slam home run. So they're up 4 points. Well, they can go the rest of the game and not make another point and the other team win, because the other team, they only cared about getting to first base every time, which was consistent, and it kept making them points. So, the first team, let's just say they were banking on having their heavy hitter hitting that grand slam and pretty much winning the game from the beginning. Well, the other team, they played the long game. They looked at consistency, and consistency will always win, hands down. So we'll just look at, this is actually ticker CHK for Chesapeake. You know, definitely, this is definitely not a recommendation to buy any stock. I'm just breaking this down just for this training video. So what I done was I already charted this out for its supports and resistances, and let's go right here to where a lot of these candlesticks are. So looking back here, you know, say we start watching this at this time frame, and then it goes down. You know, you can see it consolidating right here on this line at roughly $2.62. So then it kind of goes up, and then it, you know, it starts over time. It shows a resistance right here. Well, now that this is trading sideways, let's look more into this period, you know, into this chart. Now this chart is on a 1 day, 1 year chart. So let's look at April 6th. So I will open up on demand so we can go back and look at that. Just makes it a little bit easier going through on demand instead of creating a chart that just has a massive time frame. All right, so on the, let me clear this. Okay, on the 1 day, 1 year chart, like I said, we already charted this out based off of, you know, the price action before April 6th. Now, when you look at this, we found our low point right here, and, you know, we found other resistances, you know, as this stock was forming over the past year, just looking back at the charts. And I have another video on charting. If you haven't watched it, just quickly, to be able to find your support and resistances, you know, you basically, to find a support and resistance, your candlesticks need to bounce off of that range twice to confirm it. So right here we see the stock, it's trading sideways within this range. So for this day, let's just say it's right there at $3. You know, would you buy in that, saying, okay, if I buy in right here, it could potentially go up to this next line at $3.22. Okay, well, you know, if it did go up 22 cents, that would be great. But at the same time, you buy in right there, it has the potential to go right back down here to $2.63. So there is actually greater potential for this to downtrend to hit this support than as it gets closer to this resistance and you taking more profit. Because as this starts getting closer, that's when people are going to start selling their positions, because they know this is a resistance right here. And so it's just, you know, it's something that you have to look out for when you're talking about your supports and resistances and everything. But, you know, your risk management. So you get in here at $3, and because you know this next resistance is around $3.22, really you want to start selling off before that, because everybody's going to start selling when it gets closer. And it does not have to break past this band. That's the thing right here. So let's just say you want to make 10 cents per share. Well, if it's uptrending, that would be great. But like I said, you have a lot of potential for it to downtrend down here to the 263 range. And so that's where you need to be very disciplined on your risk management. And you should only be willing to lose 5 cents per share if 10 cents per share was your goal. Now, could you risk and do a 1-for-1 ratio? Yeah, you could take that 10-cent loss, but you're rolling the dice, to be honest. And in the penny stock world, most of the time it's pretty unforgiving if you do that. It's almost a different story though when you trade high cap stocks. It's two different worlds. So you have to be very disciplined in your trades, have proper risk management. The standard is pretty much 2-for-1, and if you have to stop out after you set a stop loss or whatever, or just decide to sell, if you have a mental stop loss in and you're sitting there watching it, then okay, it's better to lose 5 cents per share than for it to keep dropping more, and it gets to the point where you blew up your account because you wanted to wait around for it to go back up and not suffer a loss. The thing is, if you stopped out, took a little loss, you still live to fight another day. And that's what this is about. So, always, before you make any trade, chart it out to find your supports and resistances. Because the charts don't lie. I'll be honest, they don't lie. And the price action falls within these lines. So make that plan. Start off by charting it. Figure out what your entry point is. Why is it that you want to get in? What do you see here? Why do you see an uptrend? What's your exit strategy? Meaning at this price range, is there, resistance? Or was there bad news? Whatever it may be in that moment. And be ready with that discipline, risk management, and stick to it. In all honesty, the new trader should have stop losses. I know in a lot of my videos I don't, but I sit here and I watch this all day, and I'm focused on this. I know what I am willing to lose in my trade, and if I break past that barrier, I will sell it and go on. But that's the name of the game. So I hope this video will help some of you guys out, help you better understand. Check out some of my other videos to kind of explain the different things of the charts, things like that, some of the candlesticks. these indicators. These are Bollinger Bands and how to use them. And your indicators will also come into play when you're looking at your stock. So, trading is hard. A lot of people make it look easy. I'm not gonna lie. I make it look easy, but it's really not. It is hard. It takes a lot of studying. You need to paper trade. I recommend 6 months paper trading before you invest real money, because if you don't, you're just going to lose your money. I mean, if you're okay with losing your money, do what you want. But paper trade until you get good with your trades, to where you're successful, to where you can build a fake account up. And when you're paper trading, paper trade with the amount of money that you would normally trade with. Because if you start paper trading, because they give you access to 100,000 in that fake account, you can take that 100,000 and make a couple $100 in a penny stock. I mean, yeah, it looks good saying you made a couple $100, but at the same time, like, you had $100,000 and bought 100,000 shares, and it just gave you leverage that's just not realistic for you. When really, if you were just trading $1,000, you'd only have 1% of that. So I mean, you'd really just have like $1 to $2 in profit. So just paper trade with the amount of money that's realistic in your life, and be disciplined. That's the main thing to being successful in the end. So hope this video helped you guys out. Please subscribe if you haven't. Please give this video a thumbs up, and I will see you in the next one.